I am wearing a cardigan, so you know what that means. It's quarterly earnings time. My little tribute to Mr. Bob Iger. We're talking all about the quarterly earnings call, and it's kind of interesting today that the most unexciting information to come out of the quarterly earnings are the numbers. Everything else surrounding it, though, is really, really fascinating. Up next on this episode of the Orange Nerd Show. Welcome aboard to this episode of the Orange Nerd Show on OG55. We're breaking down that quarterly earnings call for the Walt Disney Company Q2. There was a lot of stuff going on here with the studio, the DTC side, the theme parks, a lot to dive into, and we're going to break it all down. But before I do that, of course, I got to introduce my producer, my brother, Mr. VashSky, Dr. Dre, host of the Freshly Squeezed Show here on the channel. Welcome back, brother. Let everybody know what they. Oh, go ahead, sir. Sorry.
No, you're good. You're good. No, I thought you were. You're kicking it off. Well, okay. Well, I will, as Darth Vader would say, right? I will dispense with the pleasantries, right?
You may dispense with the pleasantries, Commander.
Fine. Okay. Real fast. If you guys would like to follow me at home, you can go do so right down there at VashSky. Just go ahead and type it in, and it should pop up for, as Kristen Winston McCarthy would say, for all the
robust
discussion right there. It's good to have this thing back, by the way. I'm not back in person, but trust me, that's coming too. And you can go ahead and find me on Twitter there. And if you want to see me, well, you can usually see me in person on here, not just my avatar. But the best place to find me is going to be at Orange Grove 55. We have some amazing shows, including what you're seeing right now, OrangeNerd, where we talk about everything regarding the entertainment industry, especially as it relates to Disney and C-Suite, which we will go over in a moment. We have Story Geeks with Jay, where we cover the stories that impact our lives. George with his fantastic, amazing Citrus Corner, going over everything Walt Disney World related. And of course, my own Freshly Squeezed, your source for juice, news, and info, squeezed fresh right from the Grove. And George could not be with us today, which is super, super unfortunate. But I can assure you folks that we have some amazing shows coming up with him in the future. But I just want to go ahead and give out my love to him right now, because, well, you know what, it's been a while since we've had George on, so I wanted to go ahead and just shout that out. But without any further ado, OG, I guess it's time to
pay attention. It's Joe time.
That's right.
Yes. So we're going to talk all about this quarterly earnings call. This is fascinating stuff. Now, Bob Iger quarterly earnings calls are always exciting, though. This guy always brings the heat every single time, and this time was no exception. So before I bring up, I'm going to share my screen in just a moment, but before I do that, Dre, I just wanted to ask you, like, overall thoughts.
Yeah.
Overall thoughts, musings, opinions, in Cliff Notes version of what were your overall perceptions of, like, what happened here today? Like, anything that stands out in particular? Or?
A couple things stand out. I think, first off, we have seen disappointing earnings calls from across the entertainment industry, and not even just related to just studios. I mean, we've seen tough stuff from themed entertainment as well. Places like Cedar Fair, places like SeaWorld as part of, well, actually, no, I think Anheuser-Busch sold their stake in SeaWorld, right?
Yeah, I think they did.
I think they're on their own private entity or whatever now, with Busch Gardens or whatever. But SeaWorld, we've seen some tough stuff there. Six Flags, obviously, right? But we've also seen some disappointing results from Warner Brothers and Paramount. And I think Shine Nyberg on Twitter had it correct that I think a lot of people were looking for a bright spot with Disney. And to be honest, I think there were bright spots here to be sure. Some technologies that they were investing in and they kind of highlighted during this call were very, very intriguing, interesting, especially given that Disney is a company that relies on advertising, and we'll get into those in a moment. But I think for me, the big thing is this could have been a lot worse. It wasn't as bad as maybe necessarily I was expecting. There are some very concerning things that we'll get into, both as it relates to Disney and both as it relates to just, as they would say, macroeconomic factors, right? The economy in general and so forth. It's going to make it a particularly tough time for companies coming up here. They fully acknowledge that, but they are optimistic. And so, well, I guess I will remain optimistic as well. I think this was better than some of the doom and gloom out there for sure.
Yeah, no, absolutely. And my overall, the big standout for me in this whole earnings call was the start of this earnings call when Bob Iger congratulated Comcast Universal on the success of Super Mario Brothers.
Yeah.
Look, here's the thing with that. That was I immediately called Dre. I was on the phone with Dre. I immediately called him because that's unusual on an earnings call, right? For a CEO of a company to start the call giving another company like kudos, basically.
Mm-hmm.
Usual. First thing that came to my mind when I heard that was, okay, something's going on with Comcast and Disney. There's deal making in the background, whether it's with Hulu, whether it's with theme park rights, or whatever. Something is going on. There's a relationship building there because it's been kind of tense between Iger and Brian Roberts over the years.
Yeah.
It's no secret, and to hear that was a huge eye opener for me. It's also, in my opinion, he's kind of taken a shot at his own creatives. He's kind of given a warning shot to the animation department and saying, look what this other company is doing. You can do it too. Someone mentioned that on Twitter, and I completely agree. And I should have had the tweet on me, and I do apologize, but that's absolutely correct. It's basically given low key shade to like Disney Animation, Pixar, and all these other, the animation houses of Disney saying, look, they're doing it.
Yep.
What's going on,
Yeah.
So
because everybody was, I think, wanting to point to other things as to why animated films weren't doing that well in theaters. And you already knew that some of the lines coming out of maybe the press and so forth, trying to get cover, were like, oh, well, families were conditioned because of the pandemic not to go to theaters, and, they're going to be waiting and stuff like that. And it's like, well, that's not exactly true when you look at Mario. And in that way, I kind of think you're right there. I think he's kind of saying, hey, look, listen, if they can do it, we can do it too.
Right.
And he did talk about how they were looking to adjust windowing practices and so forth in order to kind of better manage content delivery and stuff like that, to maximize on revenue potential from these things. So that was very encouraging. But I think your point to that, I think is exactly correct. I think he's looking at it like, hey, look, if Universal's finding success in this space, so can we. And he actually said this. He said it proves that people love to be entertained in movie theaters around the world, and it creates confidence in the movie business. So he did say those things specifically. I do tend to concur with him on that. The other thing too about your theory about negotiations and so forth, I was kind of thinking that, hey, maybe there are negotiations taking place between these two players, be it Comcast and Disney. And this was kind of like a, hey, you know what? Good job kind of thing. In order to, if you want to say like, butter them up a little bit with kindness, get a more favorable deal, that kind of thing. Right. But as we will learn as this earning call goes along, that deal that they might have been negotiating with Hulu, well, that might be that might not be where we thought it was, OG, even just a couple of months ago.
Well, which makes me, and we'll discuss it. Let me bring up. I'm going to share my screen. We'll get into it for sure, because that whole Hulu thing now, I don't know. I think I know where it's going, but honestly, I don't even know now. It's kind of weird. But we're gonna dive into studio and streaming, so it'll be part of all that. So I'm gonna share my screen and we'll kind of dive into this.
Yeah.
I'll let you kind of take the honors on this one, Mr. VashSky.
Thank you, sir. Yes. So this is page 3, correct? You can see right here. the Disney Media and Entertainment division, when you comparing it year over year with Q2 2022, this was the Q2 2023 earnings report, and you compare that against Q2 2023. Now you can see that total segment revenues actually went up by 8%. Looks like to me, I think it's what $1 billion. Is that right? But I want to go ahead and kind of reference this right here. This total segment operating income that has actually gone down a little bit, and I think that's what has people a little bit worried. Is okay, so these losses that some of these other companies have experienced, Disney isn't necessarily isolated from that. I think it's for a few reasons. I mean, a lot of it is the advertising market. The advertising market is not as, let's say, robust as it was. Because think about it. When you have businesses who are doing not that well financially themselves from selling product or, any other services that they provide, right? Because I think the demand has maybe waned as we've gone along here very, very recently. And there might be an oversupply problem. Well, then how many businesses have the budgets for their advertising divisions in order to advertise their product, right? Everybody's looking to cut costs everywhere that it is, and the Disney company referenced that kind of advertising market instability that's going on right now, and basically was saying, hey, that you're gonna see effects from that. You're going to experience that for sure.
Yeah, no, absolutely. And they lost what was it, 4 million subs worldwide on was that just Disney Plus and Hotstar, I believe, that lost 4 million, or was that including the Hulu and all that too? I'm not really sure about that.
So they had some news on that. Let me just see if I can find it in my notes here. Sorry guys, do apologize if I'm a little slow at this right now. Give me a second. Wasn't expecting that question. Okay. Domestic subs. All right. So per Kirsten Wasteland McCarthy, her comments here, domestic subs declined slightly because of impacts from the price increase that they just imparted in December. Domestic ARPU increased sequentially by 20%, reflecting strong subscription revenue growth. So that's good. So think of this as kind of like your per caps and your attendance, right? Your attendance might have been down, but your per caps were up. We've been seeing that a lot from the themed entertainment industry. Well, that is, you can kind of think of it in the same way for Disney's specific DTC division.
Well, and that's really the point. Like, that's really the most important thing. Like, that's been the whole thing with this whole streaming thing, was like subs don't really matter. I mean, even if you look at YouTube, you can have 1.5 million subs, but if no one's watching your content, you're not making a dime. You don't make money on in YouTube, you don't make money off of subs, but the real money, even with like Disney Plus and all these streaming services, is that ARPU. You know what I'm saying?
Right.
That's where they make the money, and that's going up, and that's great.
It is, and they were actually quick to point out that they want to actually increase the cost of the premium tier of Disney Plus, specifically, right? The non-ad tier related tier for Disney Plus, specifically to increase, as Iger kind of put it, the delta between those two products. So to push people more over to the ad tier side of the business, or the ad tier part of Disney Plus, because they feel that through some of their strategies that they are going to be implementing with advertisers, and apparently they already have in some respects, specifically programmatic and addressable advertising strategies, that there is kind of a revenue potential there that is significantly higher than even Iger was necessarily knew about, let's say, until as he himself said, that he was informed by some of his people around him.
Yeah,
so
that's wild.
Expect that ARPU to increase, whether it be people staying with the premium ad service, or the premium tier for Disney Plus and just paying the higher price, or getting more advertisers via their ad tier service specifically. So on the DTC segment, talking about subscribers. So DTC operating losses improved by approximately 400 million. I believe that's what she said, Christine Waysons McCarthy did, about how many losses that they were incurring in the quarter. I think it was around 400 million. Is that right?
That is correct.
Okay. And then, Q2 saw Disney Plus core subscribers. They grew modestly over 600K, but that was net additions. International subs increased by 1 million. And the reason why it was net is because I believe, domestic subs declined slightly because of impacts from the price increase.
Yeah.
So that's kind of what was going on there. They were gaining in other segments, people jumping around, so forth. It is unfortunate that your core subscribers like that are kind of wavering a little bit, and I think that had a lot of people on the call very concerned. You could kind of tell that from the questions that were being asked. Like, it was like, okay, well, you're not gaining in the millions anymore. You say net growth in this segment, but we know that your core subscribers are the most profitable. What's going on here? Iger did say that I guess they expected a lot worse. And so in terms of those expectations, they overperformed. And Christine did say that the projected pace of this kind of sub loss is expected to continue into quarter 3, but they do expect that their core sub growth will rebound starting in quarter 4. So we will see what actually comes to fruition on that. I wanted to point out something real fast about this too.
Sure.
So they talked about programmatic advertising and addressable marketing and advertising as 2 key strategies that they are implementing right now. And Iger says this. So over 40%, over 40% of their domestic advertising portfolio is addressable, including streaming. They're interested in the growth opportunity and potential in programmatic advertising and are well positioned to scale. So what is programmatic advertising? Programmatic advertising, I had to look this up. It utilizes AI plus real-time bidding to help automate and streamline the ad buying process. So programmatic campaigns allow businesses to specify a target market, budgets and goals for a campaign. Ad experts configure that campaign and use AI to place ads across dozens of ad networks to reach your highly targeted audience. So this cuts down on costs while increasing options and flexibility for advertisers and businesses. So it's essentially automated advertising, utilizing a number of specified inputs and triggers that AI can then use to both real-time bid and distribute ads where pre-specified target audiences will most likely encounter them. That's a really kind of interesting thing right there. Apparently, it's been going on for a little while. Iger's saying that they added over 1,000 advertisers over the past year, and they now retain 5,000 advertisers across streaming platforms, with over a third of them buying advertising programmatically. And so it's almost like a subscription advertising model for advertisers, right? And it utilizes the functions of AI to better kind of bid and target their key demos that they look for their respective products. It's very, very interesting.
Wow.
It's
smart.
A real kind of crazy thing there. Go ahead.
That's really smart. No, that's extremely smart. And that's a great. I could see why advertisers would dig that. You know what I'm saying?
Right. And you can see just with those tools, and also that's just one of them. The other thing that they talked about is addressable marketing and advertising. So that refers to the ability to market directly to individuals rather than groups or target audiences. And that way you can kind of tailor ads specifically to and for individuals, right? Utilizing advertising profiles, which are either generated or purchased. So Facebook, Google, that's how we always hear about the revenue models. That's one of the ways that you would utilize that information, right? However, Iger was saying, he's like, look, listen, man, that there is a way to make money off of streaming. Yes, we can increase ARPU through price increases and so forth and do all that. But utilizing these techniques, this kind of programmatic advertising and addressable advertising, the revenue potential is off the chain. And he is really inspired by that. And I think that's why his mindset may have changed with Hulu.
Yeah, and that's a very targeted approach to advertising. You know,
he even said he was saying he said surgical is what the word he would use. Go ahead, OG.
Yeah, no, that's exactly that's well said. Surgical, exactly it. And you're right. That might be why, because we've been speculating, and let's talk about this for a little bit. We've been speculating for a long time how, like, they might sell Hulu, because you sell Hulu to Comcast, right? So you make billions of dollars on the front end, and then you make, for years on end, long term, you make money from Comcast because they have to pay Disney to kind of house Disney's IP and their properties on their platform. So that's a moneymaker right there. That's a cash cow for them. Then Bob Iger comes out today and kind of sounds like, honestly, now he didn't say it officially, but he kind of said it without saying it. We're keeping Comcast, and we're keeping Hulu, and not only are we keeping Hulu, but we're going to incorporate it into a Disney Plus and this new separate app. So people that have a D Plus subscription and a Hulu subscription will be able to access a separate app where you have both of these on one. So you know it's attractive because you don't have to like sign in and out of different apps to check out your favorite programming. So you're watching Moana with the kids at dinner, and then when the kids go to sleep, now you can switch it over to whatever's on Hulu, right, for the adults. That's interesting, but that implies very heavily they're not getting rid of Hulu. If they're giving consumers this kind of like this all-in-one app with both of these. He didn't commit to saying they're keeping Hulu, but I can't imagine they're going to get rid of it now if they're investing so much money in this new app, right? I mean, it seems.
Oh, I know, and that's why people were like, "Whoa, wait a minute! You changed your tune on this." People who were providing questions were kind of bringing up the fact that it's like, okay, you seem to have changed your stance on this quite considerably. What might have informed that? We'll go over the question and answer section and let Iger kind of flesh these ideas out in that. But just to kind of give you a little bit of what he said initially, he's saying by the end of 2023, by the way, that they should have this integration in this kind of more unified experience. And he says that this is a significant step in creating growth, in creating DTC as a growth business, greater opportunity for advertisers. And one can imagine, right? Now you can service Disney Plus and Hulu subscribers within a more unified matrix there. More robust and streamlined content. Okay. Greater audience engagement and more unified streaming experience. Absolutely, for sure. But he also said it would be a reduction of costs, which we'll go into a little bit during that question and answer segment. But reducing costs is also kind of like, oh, okay, all right. Looks like it might not just be a Hulu button in Disney Plus, right? It sounds like, there might be some streamlining within their DTC divisions themselves. He said that the general entertainment provided by Hulu creates a very compelling package for consumers, and I think it does. I mean, when I was kind of recently, we were talking about as a family, like, do we subscribe to Disney Plus? Do we subscribe to Hulu? Do we do both? And honestly, the bundle, the dual bundle is kind of what they refer to it on this call, was very compelling for us, and that's what we ultimately did. So I could totally see what he's saying.
Yeah. Now, what does this mean though so in the beginning of the call, he was giving kudos, I guess you would call it, right, to Comcast and saying, hey, congratulations on the massive hit Super Mario Brothers, right? And look, like we said, it's very unusual for a CEO to do that on a company earnings call, giving credit to another company, especially Iger giving credit basically to the guy that we hear he despises, Brian Roberts. Okay. So this is an extremely unusual thing that's happening right now.
Correct.
So like I said, I initially thought, okay, this means there's a deal to sell Hulu. Well, obviously, it seems like the deal to sell Hulu now is off the table. So what's the motivation here? Like, is it theme park rights? That's why he's kind of getting in bed with this, with the Comcast stuff? You think that's what it is? Or do you think that there's maybe something in streaming that they're working out? Like maybe they're not going to sell Hulu to Comcast, but maybe there's some sort of licensing thing they're going to do with Comcast. Maybe Comcast will have a licensing arrangement with Disney. Maybe some of Universal's content will be on like D Plus or something. Like, what's going on here, Dre? What do you think?
If I had to guess as to what may have happened here, I'm guessing that negotiations were taking place and they might have come at an impasse. They might have come at a place where it's like, okay, you're not budging, I'm not budging. So one, kill him with kindness, as Iger does, which is the start of the call. But two, I mean, we've seen this with the RCAD and CFTOD, right? Which was referenced again on this earnings call, which we'll get into, I'm sure.
We'll get into that.
But we've seen how Iger will use these kind of public forums to change the game, let's say, when it comes to negotiations or a conflict or whatever, right? I think in the Hulu sense, I think they came at an impasse and kill them with kindness, like I said. But I think the thing here is like, we have a strategy without you. We're not beholden to a deal to sell this thing to you.
Right.
If we purchase it, we're gonna do what we're gonna do. So either give us more favorable terms, or else we're just buying Hulu for the amount dictated by Comcast ownership stake. And I think that might be where some of this is right now.
That's smart, Dre. I like where your head is at with this. That's very smart, because he's kind of giving Comcast like, hey, look, we got plans we're going to integrate Hulu into this new app with D Plus, and we're going to do all this stuff. We got a roadmap. So if you can either play ball or we can do this, right?
Yeah.
Very smart, dude. I think that might be what's going on here. Maybe you're right. Maybe they came to an impasse. Maybe they came to a point where they couldn't, neither side was budging, and now Iger's playing his 4D chess thing. Like you said, he's done with Ron DeSantis with the $17 billion, which we'll talk about in a little bit as well. But this is what Iger does. It's Iger doing Iger things 100%. 100%.
I think it is. And Christine Waysons McCarthy reiterated that they're confident for the long-term trajectory for linear and DTC. We'll get into linear in a moment because that wasn't very good. But they have a content creation strategy, which Iger talked about this as well. They really will kind of want to reevaluate volume. They want to reevaluate, how much content they are actually producing and for what cost, right? They want to, Kirsten talked about maybe actually taking content off of some of these DTC services.
Can I just say for a second? Can I say for a second? I just want to kind of rant for just for a second. I got to get this off. I got to get this off my chest.
Please.
I hated hearing this. I hated hearing this, because I've said it many times, when I watch Disney Plus, 95% of the time I'm on Disney Plus watching something, it's the old school stuff. It's like Swiss Family Robinson, Pollyanna, those Callaways, Old Yeller, the stuff that a lot of people probably don't watch. Let's be honest, right? The normies aren't watching Old Yeller very much, right? So when I hear something like this with them saying like we're going to start removing stuff off of these platforms, that's going to personally, my viewing habits, I think it'll impact me quite a bit, because they're not going to remove Moana. They're not going to remove Star Wars or Marvel stuff.
No.
What are they going to remove? They're going to remove the ugly duckling, that darn cat, right? That's the stuff they're going to remove. And that's the stuff I'm watching. So it's like, oh, geez. That pissed me off a little bit, because I can see the writing on the wall, and they're going to probably remove a lot of those great Disneyland specials with Walt, because it's just, I'm sure the viewership for that stuff, there's just not a huge demand for it. It's outside of like people like us, so it's going to, we're gonna take a hit as nerds. We're gonna take a hit, I think, with the content removal. Mark my words on that one.
Yeah, and it's so I guess they talked about it too. Christine Wilson McCarthy did when they talked about removing content. She said reviewing content offerings across DTC services to align with strategic changes to to content curation, right? So they're going to be reviewing the things that they have, and then they're going to be taking stuff off, right? And I'm guessing, OG, it's kind of along the lines of what you're thinking of right here. But she said this: removing certain content from their streaming platforms, but as a result, they will take a $1.5 to $1.8 billion impairment charge. And
what does that mean?
Will be recognized in Q3 as they complete their review and remove content. So I guess they're going to incur a charge. So an impairment charge is a process used by businesses to write off, quote, worthless goodwill. And so there are assets whose value drops or is lost completely, rendering them completely worthless. Investors, creditors, and others can find these charges on corporate income statements under the operating expense section. These figures can be used to determine the financial health of a company. Creditors and investors often review impairment charges to make important decisions about whether to lend or invest in a particular company. So I guess because they are rendering this content as void, right? They are stripping them of their value because they're not available on the services in which they were. And so there's a loss just incurred from that. So it's kind of doubly bad because it doesn't look good for the balance sheet and it's not good for the consumer. But I guess, according to Iger and Waysons McCarthy and everybody in C-suite, this is the right move to make. I don't necessarily think it's the right move to make. I think when people evaluate the streaming services, a lot of it's value, right? What am I getting for my monthly fee? Right. And removing content is removing value while increasing prices, as he said, whether it's to create a delta or whatever. I think it's a bad move.
Are they trying to Disney Vault this stuff? Like, are they trying to create?
Yeah.
Right. Like take it off the platform. So then in 2 years you can say, hey, the Little Mermaid's coming back to Disney Plus, right?
I guess so.
And
I don't like it.
I don't like that either. And it's gonna. I'm telling you, I mean, look, I enjoy The Mandalorian. Absolutely love The Mandalorian. I've been watching all the Marvel shows, Hawkeye, all of them. I've seen them all. WandaVision. I love WandaVision. I mean, the new stuff, a lot of the new stuff is pretty good, but I'm telling you, most of my viewing habits on D Plus is the old stuff. Yeah. And I think that's the stuff that's really going to that's going to be the brunt of what they're going to remove from this platform. And it's sad to see. It's been one thing I've enjoyed the most.
I agree. I agree. I just,
I
don't like it, but we'll get into more of this a little bit later to wrap up our DTC portion of this. They said that they were confident in streaming's long-term profitability. Strategy is for sustained growth and success in the future. So he cited the strength of their content, the appeal of the one app experience and the ad potential of it, the rationalizing of volume and spending, maximizing windowing opportunities. This is very interesting because we've been, day and date. Don't expect that. That's for sure. Expect these things to be pushed back, which I think is good. I think they did find. Christian Waysons McCarthy even referenced it. I guess they earned income from Way of Water that kind of uplifted the losses that they would have otherwise incurred at the studio division from films like Quantumania and so forth. Wow. So it's like, if we keep these off of our streaming services, right? And we have these things play out a little bit longer in theaters, we'll get rewarded for it if it is compelling enough content. And so I think those windowing practices will continue to evolve. And he says it right here. Recalibrating investments internationally. So this is an interesting thing. He even said this in a question and answer section. He said, look, if we're investing into an international marketplace, right? If we're investing in, let's say, in a territory or a country, and there is never going to be the revenue potential to make the investment worth it, then we're going to pull back. And it's like, yeah, no doubt.
Yeah.
That's probably a good move right there. So he talked about that. He talked about perfecting the pricing model. We talked about that. Consolidating global streaming businesses under a new organizational structure. He cited Alan Bergman and Dana Walton. But Kristen Swaystein McCarthy said she kind of reiterated his points, was very confident in their trajectory for linear DTC, said that their content curation strategy, their planned price increases, expanding relationships with advertisers. Part of that is via the tools that we talked about here and ongoing disciplines regarding costs. So, they're on board. Kristen Swaystein McCarthy did say in the last question there that their peak operating losses for that division will probably be between Q2 and Q3. And then Q4, we should be kind of on the path to profitability there. Or at least there will be significantly less losses. We will see.
Yeah. It seems like they're making moves. I mean, look, this whole like subscriber arms race that these streamers were in initially proved to be very fruitless.
Yeah.
And Wall Street has really turned its focus on profitability. And it seems like Disney's making some progress on that front. Yes, they lost subs, and that's going to be the sexy headline because it's like, ooh, they lost subs, but they gained where it mattered more though. They're losing less money. They're becoming more profitable. That's what really counts at the end of the day. No, it's not good to lose subs, but they're moving in the right direction because they're making more money now than, so it's, I get it, but
Well, I just didn't expect that Hulu would be part of that strategy. I mean, the way that, he even said it. Iger even said it during one of the Q&As. He's like, yeah, I've had 3 months to now reevaluate this, and I have myself changed my tune when it comes to Hulu. I'm just surprised. I'm kind of shocked that they would change in this way, but apparently he got some guidance there. He got somebody in his ear going, oh, hey, hold up. Let's not have this horse lead the stable just quite yet.
Yeah, but it might be what you're saying though too about Comcast negotiations. He's trying to. It's a sales tactic. Oh man, we looked at the books, and it turns out this thing is really fucking profitable. We could make a lot of money here. It's sort of like telling Comcast, "Oh, you better grab this thing. This is like really good stuff."
Well, it's also too. It's like, hey, this thing is really profitable. You don't come to the table, we gonna go for it. That kind of thing, right? So that valuation. Better, you might want to put a couple more zeros on the end of that check.
Yeah, exactly. 100%.
So, that's very interesting. Should we go to linear television?
Yeah, let's do it. Let's rock and roll. Linear, let's go.
Real quickly, linear, not good.
Yeah.
This was kind of a sticking point here. So let's see here. While DTC results improved year over year, content sales, licensing, operating results declined modestly. They incurred an $800 million loss incurred at domestic linear networks, $160 million losses at their international linear networks. Do the math on that, about $1 billion, right? I think we saw that in the earnings report there. I guess they were saying that this was consistent with prior guidance, though, that they projected that this would happen. But that the domestic results decreased in both cable and broadcasting, driven by higher sports production costs, NBA contractual rate increases, college football playoffs, and NFL championship timing. Lower broadcasting results driven by decreases in advertising revenue across ABC network and TV stations. Probably increases in costs as well. Domestic affiliate revenue decreased by 2%, driven by a 6-point decline from subscribers, both partially offset by contractual rate increases. So not good. Rate growth adversely impacted by 1%. Domestic advertising revenue declined 10% year over year. ESPN, however, their revenue was up by 2%.
Wow.
More flat when adjusted. Sports marketplace, Kristen Swaystein McCarthy was saying, is very stable. Ad sales for that segment are pacing upwards. However, overall, the ad market, quote, has been challenging, i.e. it is falling. Softness will continue into Q3 and Q4. No surprise there. It's going to be rough. It's going to be rough.
Yeah. Well, with ESPN is sports are evergreen. It's evergreen. Like it's a thing that's always been popular. It's always going to be popular. It's cash on the table. ESPN just needs to get out of its own fucking way and stop with all the damn politics, and you'll be fine. That's the problem.
Oh, I know. And I think there are encouraging signs. I think Pat McAfee, right? He big internet personality. Obviously, has a sports internet show or podcast, right? And he's been doing work with I can't remember the group he was doing work with, but he's partnered with another group there in order to deliver his content or whatever. And I thought he was part of this. He was in this contract for a little while, but he recently met with Bob Iger, and everybody speculated, what does that mean? What is going on here, right? And there is some rumblings that maybe like Stephen A. Smith or some of the more established commenters or commentators or media personalities on that platform might be going away, right? They have bigger contracts, right? They, it's everybody wants more money, right? When those negotiations come up, and it's like, well, do we appeal to a younger demographic, younger audience, one that's a little bit more in tune with the culture? That's Pat McAfee for sure. He is suggesting that there are going to be big announcements, probably the biggest. He was saying the biggest in the show's history, right? So something might be coming out of that. We'll see on that. But I think if the strategy is get rid of some of these longtime guys that demand heavy contracts, and replace them with guys that maybe are a little bit more in tune, a little bit more in line with the culture, where it's going, all that. These kind of personalities that are really big in their own right, that get a lot of views themselves. We've seen Pat McAfee or people like him integrated in places like college football, their sports programming regarding like the Rose Bowl and so forth. But to establish deeper relationships with some of this emerging talent that demands maybe less of a fee, but could maybe bring growth, especially for a network that needs it. It's a good move, smart move.
It is, and it's funny. Like I'm not a like I'm totally out of my element with the sports stuff, right? Like I don't follow it. I don't know anything about it, and it would always. And it's funny, and I see why Disney used to do it, and they still do it. But when they used to do the like the Star Wars trailers on the Monday Night Football, it used to drive me crazy because I had to sit there and watch football to get like the Force Awakens trailer. And it's like, as a person, I don't like sports. It's like having to chew through the box to get to the pizza. I was so frustrated with that. I get it, Disney. I get why you're doing it, but God, did I hate that.
I was laughing one year because like I watch sports anyway. So, or at least like football. And one of the, I think it was Force Awakens or Last Jedi. I can't remember, but, They did the whole trailer premiere during Monday Night Football, which I always thought was a little bit like, do the demos overlap? I'm not sure, but okay, whatever. It's I'm sure people smarter than me are figuring that out. The game kind of like went a little bit over, and the coaches were kind of playing with the timeouts that they had. They were just kind of drawing it out before it went to their halftime, and people were like on Twitter were pissed. I always found that kind of funny, but
oh, dude, I'm telling you, like all the nerds who don't watch this stuff usually are like, come on. Oh, dude, it used to drive me nuts. I'm sitting there like my heart's pounding. I'm like, oh my God, this trailer. And they're just like dragging this shit out. And I'm like, oh my God, it's wild. But
to finish up here real fast. International channels operating income decreased year over year, driven by reduced advertising revenue. Obviously, we talked about that at length, but partially offset by lower programming costs. That's good. Also, too, both ESPN and Hulu increased subs over the prior quarter. So that's good.
Oh, that's good. Okay. That's really good. Okay.
Yeah.
Very interesting stuff coming out of streaming studio and linear. Very, very interesting stuff. I think next quarter should be better, at least on the studio side. We got Guardians 3, which, I heard it's getting great word of mouth. I mean, I know you and George liked it. Mermaid, which I know a lot of people don't like this movie and they don't want it to do well for various reasons, but I think it's going to do well. It's getting pretty decent word of mouth. So Disney has some stuff lined up for this next upcoming quarter that on the studio side, I think we're going to see much better numbers.
Yes.
So we'll see how that all that shakes out, but
that's really interesting about the studio. You talked about Little Mermaid.
Yeah.
This was something that was reiterated over and over again in the call when they were talking about studio, was that they really feel confident in their what they would call quote strong summer slate.
Mhm.
And they referenced The Little Mermaid specifically. They referenced Elemental, and they referenced Dial of Destiny. That tells me that their internal tracking is suggesting that those will be the top revenue earners potentially at the box office in the summer. We have heard rumblings that Little Mermaid's tracking very well.
Yeah.
I believe it had its blue carpet premiere a
Yes,
couple
they
days
did.
ago.
They did. Yeah.
And really strong word of mouth coming out of there. We'll see if that's in line with what the critics say versus what the audience thinks about it. We
Right.
will see, but initially looks very good. We'll see if they can overcome some of those investments in Dial of Destiny. But I mean, they referenced them multiple times, so they're obviously very bullish on them.
Well, yeah,
We'll
and
just see
Mermaid.
how that goes.
Well, and with Mermaid, the embargo is lifting like weeks before it comes out. I mean, that's usually when a studio is like not confident in their movie, they don't do that. Like they don't because they don't want like bad word of mouth for like weeks leading up to when it releases. Right. So you'll see like on a bad movie that the studio doesn't have faith in, the embargo drops like 2 days before the movie releases or something, you know? It's pretty bad. But for Disney to say, hey, we're gonna give this movie like 2 or 3 weeks with the embargo,
yeah,
they're confident. Now that doesn't mean it's a good movie. I'm not saying. I mean, that just means Disney thinks it's a good movie. You know, Disney has faith in it. The screening, the blue carpet premiere or whatever, the word of mouth coming out of that with the access media was very positive overall. We'll see how it shakes out with the normies. In my opinion, this movie looks no better or no worse than any of the other live action films, which I had no interest in any of the other ones too, to be honest. But does this really look worse than Aladdin? Nah, not really. It looks pretty much the same, you know. And does it look worse than Lion King or any of the others? Not really. And the normies flock to all those. So I think we're going to see a similar reaction here. Could be wrong, but it's going to be very interesting to watch. That's the movie to watch. There's a lot of people, a lot of eyeballs are on that one. That's going to be fascinating.
That's one of the big question movies, I think. The other one is Dial of Destiny for me, but I think Elemental, I think it's pretty good. Trailers look good. I think my family coming out of the trailer for that was saying looks pretty strong, looks pretty good, looks like a return to form for Disney. So that's all good. I think it's gonna bring people in. The question is how much, obviously, but we'll see. It's new property. Little Mermaid's definitely the one to watch, man.
It's the one to watch.
I don't know. I don't know, but we'll see.
Real quick before we dive into our, we're going to talk parks and like right now after this, but I just want to bring up one thing because I'm kind of confused, right?
Sure. Yeah.
So we've been hearing, I think even Alan Menken mentioned it, if I'm not mistaken, but we've been hearing that they changed Kiss the Girl to incorporate consent, right?
Yes.
And then Disney released a clip of like pretty much the whole scene. I mean, it was like a 1.5 minute, 2 minute clip, but it's one song. So the segment's only probably 3 minutes, you know, total.
Sure. That's if you can see it. It's pretty dark there.
It's pretty dark. It is pretty dark. But it's like, to me, it looked like the animated movie almost verbatim, like very little changes. I didn't see anything in there that indicated they changed the consent or anything. It looked like they were in the boat. They were going to kiss and they don't. They were going to kiss and they don't. Am I missing something, Dre? It looks exactly the same as the freaking movie. I mean, the animated movie.
I don't know what they're referring to.
I don't either.
Okay. So the thing, there's nuance here with the original that I guess went over everybody's head, right? The idea is, I mean, and some of the marketing for this film, some of their marketing, I guess, partners or whatever, the press is saying, oh, well, she, you know, it's not just for a boy this time. It's just, she wants to do this and this kind of stuff. And it's like, well, she wanted to do it before. It wasn't all about the boy. Part of your world wasn't just for him, right? Your, obviously, she's talking about Ariel. I'm sorry, Eric. Sorry. But it wasn't all about him though.
She was collecting this human stuff for years. She had a whole cave full of forks and knives.
Like,
and
I want to run. I want to dance. I want to do the things that the humans do. Right? It wasn't all about him. Okay, but that's really important to understand because they're saying, well, in this kiss the girl sequence, she's got to get consent. She wants to be human,
right?
And Ursula is saying, to be human, you have to get Eric to kiss you.
Right.
The consent was already authored with that arrangement. when she signs the contract, she's like, yeah, I'm willing to do this for this, understanding the terms. She's already given consent literally in a contract in the freaking movie.
She signs it and she's off. Yeah, you're absolutely correct on that, Dre. That's fascinating. Fascinating stuff.
Okay.
That's fascinating.
I don't know how much further we could have gone with that. Obviously, we live in contemporary times, which, I question some of the decisions being made by creators out there, but they really want to stamp it out here. I didn't see anything different there. Apparently, the lyrics for some of these songs imply some other things going on. We'll see when they actually come out. But I just think it's... I guess you have to do it because even the choice of, using Halle Bailey in this role is going to appeal to a certain demographic. You want to make sure that demographic is with you and above board on everything, so you can't overcompensate, right? I don't know, man. I think you're kind of taken away from the original piece there. To disparage the original piece to make these changes while doing it, I think it's a bad move.
Yeah, it's interesting. We'll see how it is. All eyes are on this movie, and honestly, the only thing that I have any interest in with this movie in particular, because I don't like the live action remakes overall, is Halle Bailey. I think she's a wonderful young lady, very talented. I'm rooting for her more than anything, to be honest with you, because the live action remakes, for the most part, aside from Cinderella and maybe The Jungle Book, let's be honest, they've been pretty bad. So, but Halle Bailey, I think she's a fantastic young lady, and I hope it does well, because I think she, I think it's good. I think for her, I think it'd be great. So we'll see.
So, I think it's about time we get to the parks.
Yeah, let's do some parks.
Okay.
Yeah, let's do some parks. You want to kick us off? Get the park started.
So yes, I will go ahead and do that. Iger went ahead and started off talking about the parks segment as a key growth driver for the company. That was good. But they were really proud of international performance. So they kept reiterating this over and over again. Expansions aim to increase capacity and provide longer-term growth. We're opening up. This includes Disneyland Paris with its Adventures Campus. They said it's been a great success there. They reference Frozen. But not the third land that was projected for Disneyland Paris. I thought that was very interesting how they didn't actually reference that. They referenced the two things that had been approved, but not anything more than that. There's some speculation out there that if you remember, if in the history, that was going to be Star Wars Galaxy's Edge, or at least a version of it, right? And that was cut.
Not anymore. And
so there's rumors, is it going to be Lion King? Is it going to be Pandora? What is it actually going to be? They still are very cagey about that, but they did say that these long-term investments were going to be coming online very shortly here. They said they were really proud of Shanghai. I guess Shanghai has really rebounded from this kind of post-pandemic kind of malaise that they've been in. They were closed down for a very long period of time, and well, you know how they do things out there, and in the country with the red flag, they like to close you down, just for what people can only assume to be kicks and giggles, because it's that time of the week, we're just going to close you down. So this kind of operating on off kind of situation has been really damaging for this park specifically. They were saying that they were really excited about Zootopia. They were saying that it has very recently been rebounding very, very well, which might offset maybe a softening of the parks division overall in Q3. I thought that was kind of very interesting. We'll talk about that. We'll talk about that more for sure. They said that they were proud of Hong Kong Disneyland. Frozen is poised to open in the second half of 2023, and that team Tokyo Disneyland was celebrating its 40th anniversary. They were excited about the fantasy projects and so forth, and all of that. Okay, so now it turns to more domestic parks, right? And Iger was talking about the 5 changes that were coming to Walt Disney World, saying that noting specifically the expanded access for APs who don't need to make a reservation for certain days. Those are the good to go days. Removing the need to make additional reservations with date-based tickets. Again, all of that stuff, folks, we're going to cover much more in depth in a future video. I'm just bringing it up here for just the purposes of what Iger himself was iterating as an important thing to bring out to shareholders. So trust me, we will go over that.
Yeah.
And he cited these things as examples of, quote, continually listening to our guest and improving the guest experience. I want to go ahead and play some audio here. I thought this was very interesting. So here we go. I think this is 21. 21 if I'm good there. Here, let's see. Let's give it a try.
To improve their experiences. And we have a number of other growth and expansion opportunities at our parks, and we're closely evaluating where it makes the most sense to direct future investments.
Isn't that interesting? I thought that quote was very, very interesting right there. We have been talking about it, OG, and we'll get to it more.
Yes.
When it comes to the RCID or CFTOD. They're definitely evaluating where they're going to be putting their bottom dollar, aren't they?
Where they're going to put, where they're going to invest. Now, remember, we talked about it many times on this show, and I got shit for it on Twitter too, for even suggesting such an idea that they're going to use the $17 billion that he mentioned in the annual shareholder call as leverage against Ron DeSantis. And sure enough, that's exactly what he's doing here. He's saying, we're going to think about where it makes sense to invest. He even mentioned the $17 billion in the past tense. Yes, that we were going to invest $17 billion. So this is very interesting. It's definitely, I think, what he's doing, and smartly so. Smartly so, because I've been saying this for a long time, and a lot of fans get mad at me for this, and I don't really care, to be honest with you. You have to play ball. You can't. Disney needs to use whatever they have as leverage against Ron DeSantis. So what does Disney have? Well, you can't move Walt Disney World. Okay, that's not an option. No. You know, sorry, North Carolina, but you just can't. So what do? Okay, well, what you do is you put like a freeze, or you pull back on how much money you pour into the state. Right. That's how you punish Ron DeSantis, is that you don't invest as much as you would have. You're not going to bring in, the tourism dollars like you could. You're not going to bring in the jobs like you could. That's exactly what Bob Iger is doing. And here's the thing, too. I've seen a lot of stuff on Twitter about, well, if Comcast is probably really happy about this news that Disney is going to be pulling back investment in Florida, and they probably are. But here's the thing about Comcast Universal as well. They're not exactly going forward with this big kind of ambitious thing for Florida after Epic Universe. If you really look at what Universal has planned, right? Yeah, Epic Universe opens in 2025, but everything after that has nothing to do with Florida. It's everything except Florida. Okay, once Epic Universe opens, it's about the resort hotel here in California for Universal Hollywood, the $1 billion investment that our friend Theme Park Wizard and Universal Corps mentioned coming to Universal Hollywood, the theme park in Texas, the Halloween Horror Nights thing in Vegas. Once Epic Universe opens, there's nothing in the pipeline for Florida. So I think Ron DeSantis needs to kind of get off the arrogance a little bit, because these companies after 2025, what do you got in Florida? Disney's saying they're going to pull back. After Epic Universe opens, Universal's looking at other stuff. It's not looking so hot for Florida after Epic Universe opens. There's not a whole lot of investment plans from either company after that thing opens.
to be fair to Florida, no. Yeah, exactly right. So you do have the Poseidon thing going on, and you might have some expansions to Epic Universe that just haven't been detailed yet. But you're right though. If you're looking for something that on the scale of Epic Universe, that ain't coming. Like that's not. There's no way.
Everything announced has nothing to do with Florida, even on Universal side. Yeah, Epic Universe was already in the pipeline, but everything else, it's Texas, it's Nevada, it's Hollywood. It's all focused on other stuff. So I think, look, and I know Ron DeSantis maybe doesn't care because he'll be long gone probably, when a lot of this stuff comes to fruition. I mean, once Epic Universe opens, he's like on his way out almost, right? So I get it. Maybe he doesn't give a shit, and that's fine. But I think that you should incentivize more because there's not a whole lot coming after 2025 to Florida. And I think Floridians want to see more,
I think they do. I mean, look, so just like we were talking about with the Hulu thing, this is, we predicted it, OG. We predicted what was going to happen. We said, have you ever heard them ever mention a hard number as associated with a long-term investment in a property? We've never heard that before. Why is it happening now? In the context of the RCID specifically, that was the clue, right? That's the carrot. It's like, hey, you want this? We're going to invest this. I better stop. Otherwise, we're not. And actually, the 45th president of the United States said the same thing. He didn't say it quite like that, but he said, hey, watch. Next move, going to be from the mouse, and it's going to be them shifting their investment to other places. And sure enough, if we listen to that question and answer on this specifically, which we will, that's what he kind of says. He says, well, we were going to invest in Florida in the amount of $17 billion. It's like, oh, it's like, oh, there you go. That's the one, right? So, does that change the dynamic? I think you're going to have articles published either today or tomorrow talking about how, DeSantis loses out on $17 billion from Disney because of this kind of feud, and how it's going to maybe it's going to hurt job prospects, right? The amount of jobs that are going to be available in the Central Florida market, the growth opportunities that are now cut, maybe the wage increases that were going to happen. I'm sure all of those things will be put on the table by the media. Whether these things are true or not true doesn't matter. The optics are going to be against DeSantis on this very key issue and very key point. And like you said, OG, if you need leverage to self-create this in a way that Iger has, pretty master move, not going to lie.
That's what you do. That's what you do. And that's why we're seeing a big push by Disney right now with the Disneyland Forward thing. The Disneyland Forward thing was like crickets. It was crickets for the longest time. We thought after the FBI thing that this thing was dead in the water, and then all of a sudden now when Disney and DeSantis are having this problem and Bob Iger comes back to the company in November, suddenly the Disneyland Forward thing is kind of front and center again. And now it's really gaining momentum. Now they're increasing these events to kind of, to explain to the surrounding community, like what Disneyland Forward is, what the potential is and all that stuff. So this is a message again. This is another one of those kind of indirect messages to Florida. Look, we got options. We don't need necessarily to pour in billions and billions of dollars into Walt Disney World right now. We have options here in Anaheim. We can do it here. Hey, look how great Paris is doing after their Avengers campus. We could put it there. What about Shanghai? They're doing fantastic. We could put it there. And I really think that's what's going to happen because Disney World is just coming off of their 50th anniversary. They just got Tron. They just got Guardians. The Epcot stuff isn't even open yet. So they can wait out Ron DeSantis's term. It's only a few years, and it's not like Disney World didn't just get a bunch of stuff anyway.
Yeah.
So there's no really, in my opinion, there's no downside to doing this. It hurts DeSantis politically, and Disney would have probably pulled back on Walt Disney World anyway because they just got a bunch of stuff on their 50th. So it kind of works out for Disney, but I don't know. We'll see how it all pans out. But I think you're right, Dre. I think that's what the articles are they're gonna run with this headline. And it doesn't look good for him, politically at least.
No, I think you're exactly right, OG. I think you're exactly right about this. This is why I always said it's like, well, if Disney ends up investing this much money, I mean, it was, you never know, and sometimes these things can be bargaining chips at the whim of who's ever in charge, whether it be DeSantis or whether it be even Iger himself, right? Who knows where Iger will be in 10 years himself. So it's like, we'll see. And it looks like it may have been a kind of leveraging or bargaining chip in this specific situation. And honestly, I mean, I think your scenario of, well, let's take that $17 billion investment and spread it out throughout the other parks, not only domestically or worldwide, not necessarily the worst strategy either. So I wish I had better news for you Floridians. I really did. But, we're getting to a point here where hard decisions need to be made, probably on both ends of this. And unfortunately, that might end up affecting the guest experience at Walt Disney World. That's just kind of the bottom line there. We'll see on that. Again, we will continue this conversation, not only in a future video on the RCID, but also in the question and answer section of this video.
Yeah, and Iger said, he straight up said it today. He said, does Florida want our jobs and our tax dollars? Do they want it or not? Like he literally said, does Florida want this or not? I mean, he's really taken it to DeSantis. I mean, this is, and again, that's another thing that's going to be in all the headlines. Every single trade, every publication is going to talk about that quote. Does DeSantis want this or not? And I tell you, man, I mean, I don't know. If I was a Floridian, I'd be pretty upset right now because this is such an unnecessary fight between these two entities. It's so unnecessary. And it's just, I think, and the collateral damage are the fans and the people in the area and the jobs and all that stuff. And it really sucks. It really freaking sucks.
I have been very, very upset about this whole thing since the moment it began. Since the moment that JPEG stuck his big fat foot in his mouth and created this problem with the governor, because it's like, you operate out of there. What are you doing? This is one of your most valuable assets for one of your most valuable divisions. And like you said, I mean, it's unnecessary. Didn't need to get this far. There were ways that this could have been avoided. There were ways that people could have come to the table and had a mutual agreement that could have been mutually beneficial for both sides. And unfortunately, it's you got two people who aren't backing down and have things to prove. So we will see on that. Like I said, we'll continue with the question and answer portion because I definitely want to respond to Bob Iger's comments directly, and also give a chance for our viewers to hear in Bob Iger's words what he feels about all this. To kind of finish this off here, operating income increased by 20% over the prior year to $2.2 billion, and that's for the entire Parks Experiences and Parks division. Christian Waysons McCarthy says increases in international and domestic parks and experiences partially offset by lower merchandise licensing results at consumer products. Very interesting. Increases in revenue overall, lower merch revenue. So that's a very kind of interesting thing going on there. Because of JPEG, consumer products is combined with Disney Parks and Resorts. So that's kind of the
apologize for not being the ally that you needed me to be.
Thank you, JPEG. Do appreciate it, buddy. Very proud of the international parks. Higher attendance, improved financial results at Shanghai, Paris, and Hong Kong. That's good. Domestic parks and experiences operating income increased 10% year over year, driven primarily by post-pandemic recovery of cruise line. So that's very interesting. As that comes online, you got a lot of profit from that. OG, you could speak to that a little bit, right?
Yeah, no, I am a huge, like I said many times, if you're new to the channel and maybe you don't know, but I did my first Disney cruise back in November, the Disney Wonder to Cabo. And I absolutely fell in love with the cruise line. I fell in love with it in a way that I didn't think I would fall in love with it. I knew I would enjoy it, obviously, but it really has a special place in my heart. I can see why our good friend George, Family Man 23, I can see why he's really into the cruises because they're a special thing. They really are special. And you want to talk about Disney difference? My God, it's like it's the gold standard over there on the cruise line. So I'm really happy to see the cruises are doing well and they're thriving. Much deserved.
I do agree. It is very encouraging to see that business rebound. It was rough there for a while. So to be able to be for a long while to be contributing in that way to the entire Disney Parks Experiences and Parks division, that's very, very good. But Q2 domestic parks operating income came in slightly below prior year, still up 50% over 2019. So that's good. But results generally reflect. Oh, go ahead. You were saying? Oh, sorry.
No, I just said cool.
Results generally reflect cost pressures cited in guidance from the prior quarterly earnings call, which include wage increases, costs associated with new guest offerings, and inflationary costs. So something to watch out, folks. The other part of this too was domestic year-over-year attendance up 7%. Per caps are up 2%, which is moderate. But given that it's the first comparison of a full quarter of Duty Plus and Lightning Lane from both parks in the prior year, that's why the modest increase was just 2%. So per caps are up and attendance is up. That's really good because we have not heard that from basically any other themed entertainment industry provider. I haven't looked at Universal's numbers, but Cedar Fair, Six Flags, SeaWorld, they're all reporting the same thing, that per cap is up, attendance down. And we'll expand on that, but OG overall.
Yeah, no, that's fantastic. It just goes once again shows that the theme parks have been the bell of the ball with all of this. With at least lately they've been the bell of the ball. And I just look, I hope it really sends a signal to Disney that like invest in these places and you will be rewarded. Put that Pandora at Disneyland over there in the motorboat cruise area, Autopia sub area, and you will be rewarded. People will flock to something like that here. Now, also, I actually, speaking of Pandora, I wanted to actually kind of pick your brain because we talked about Paris and the 3 new lands, right? Coming there. But one of them was going to be Galaxy's Edge, but now that's like in question.
Yeah.
Now we know when Disney builds something, they usually build 2 because it's a cost saving thing. It's like going to Costco. You save money when you buy in bulk, right?
Yes.
So is it possible? Like we're getting a Pandora.
Yep.
Is it possible that the Pandora we're getting is going to be the one that they're probably going to get in Paris? Is that where your mind is kind of going to, Dre?
Absolutely. My mind isn't going there. It's gone there because I've actually included this kind of thing on other shows. I do apologize, OG. I may have not said that for the home mothership channel here at OG55. But to elaborate, my thought process is, okay, if you do something that is new in concept, right? That is obviously, it's Avatar, but separate from Pandora, you gain the ability to not only roll this out of Disneyland, but to kind of offset those development costs by including it at Walt Disney World and Paris. If you go with something that's unique, that's original, that fits within kind of the size constraints of not only Disneyland, but also the expansion pad at Walt Disney World and Disneyland Paris. So you could bring this out across multiple platforms. And I think that's where they kind of want to go with this, honestly. I think that's what they want to do. I've heard recently that the Imagineers are kind of like, can we wait for the future movies to come out before we develop something? We'll see on that. But this is why when I'm hearing that Tomorrowland might get redone to incorporate Pandora, I kind of push back on that a little bit. Not on the validity of those rumors. They could very well be valid, but I push back on the idea of it simply because you can get so much more out of it if you adapt it as its own thing.
Right.
And, put that maybe into the north of the Tomorrowland spot and Disneyland specifically. You can get more out of it if it's its own thing because you can bring it out to other parks around the world. So that's kind of where my head's at.
No, and I think that's where Disney's heads at too. You're absolutely right. You can't if you reskin Disneyland's Tomorrowland to Avatar, then it lives at Disneyland and Disneyland only. If you create a new land from the ground up, then you have potential. You could put it in Paris. You can even put it at Walt Disney World as like a offshoot of their current Pandora, right? You have much more potential there than just going like the cheap route and kind of this reskinning of Tomorrowland. And I get it, fandom. I get it. You know, you feel kind of there's a cynicalness out there right now because we've kind of endured like the Chapek era and the cheapness with that. We live in a different era right now. Bob Iger has been in the past has been much more willing to spend money on these parks. Remember, we got DCA 2.0, Cars Land, all that stuff. The first Pandora Land at Animal Kingdom. All this stuff came under Bob Iger, right? Yes. He's willing to spend money. And he brought Bruce Vaughan back. And believe me, Bruce Vaughan was doing big things when he left Imagineering, and to woo him back into Imagineering, he was promised stuff. I'm sure of it. Okay. They didn't bring Bruce Vaughan back to do a bunch of Pixar peers. Okay. They just didn't. So the stuff is going to be quality. I'm certain of it. So don't get too down in the dumps about what we can get here. I think this Pandora Avatar stuff is going to be pretty big. You also got to also think too, James Cameron does not mess around. He is not going to put up with some janky overlay at the parks. This guy's he's either big or go home kind of guy. So
I want to go ahead and play you this. I completely concur with you, OG, on all of that, by the way. And most especially on the James Cameron front. He's not going to take it lying down there. I wanted to go ahead and play this one part for you because I thought this was a very interesting explanation of what to expect from the, as she would say, DPEP or Disney Park Experiences and Products. Here we go.
Real estate sale. Please keep in mind that in the back half of this fiscal year, there will be an unfavorable comparison against the prior year's incredibly successful 50th anniversary celebration at Walt Disney World. We typically see some moderation in demand as we lap these types of events, and third quarter to date performance has been in line with those historical trends. This comparison, coupled with inflationary cost pressures, including from a new union agreement, is expected to drive a modest adverse impact to domestic parks and experiences operating margins in the third quarter compared to the prior year.
What do you think about that there? So they're blaming the unions, they're blaming macroeconomic factors, which I think is the real thing going on. The inflationary stuff, that really is going to hurt Disney Parks Experiences and Parks for sure. But then they was like, well, don't compare the attendance records or anything else of, from last year on this upcoming quarter because the 50th was so absolutely wildly successful. What do you think there, OG? A little bit gaslighting, or does she have a point?
Well, I think a little bit of both. I think actually, I think it's a little bit of both. The union thing will definitely impact. I mean, is it the whole thing? No, it's not. But I mean, they're paying cast members more. I mean, there was a reason why there was negotiations, because usually companies don't want to pay their employees more because it's expensive. It's expensive. There's a reason why most companies, when you get a raise, it's like 25 cents or 30 cents or something like that, because it adds up when you have hundreds or thousands of employees. So I do think it'll put a dent. Absolutely. The new wages and what have you. And I'm not saying that that's like the cast members don't deserve the increases. Absolutely they do. But I do think it will impact Disney's bottom line. So I think she's right on that. I think she's just stating kind of the obvious kind of with that. In terms of Disney World being Disney World's 50th being successful, that's a little bit of the gaslighty stuff. Like, I think in some ways it has been. Like, we saw one of the most successful attraction openings we've seen in a long time with Cosmic Rewind. I haven't seen the Diz Twitter community so united, like in a positive way towards anything new. like I have with Cosmic Rewind. I haven't
Right.
heard one bad thing about that attraction. It's been
Yep.
overly positive.
Mhm.
On that front, yeah, very successful. And I'm sure that
Mhm.
drove some decent attendance for Epcot. I think Tron has been successful. I mean, but you've had like the Black Eyes too, though. You had Harmonious, which
Yeah.
flopped and died a dog's death. You've had the Enchantment. That
Mhm.
was terrible, right? So
Mhm.
the 50th was a mixed bag. So she was like a little gaslighty there, but I don't think it
Yeah.
was a complete failure either. Go ahead, sir.
Well, on the business side, right? So if your per caps are up and your attendance is up, well, that's a win from a business side, right? That's a win from her perspective, being in the financial office of the Walt Disney Company. That's hugely successful.
Right.
From a guest standpoint, that's where there's a little bit of difference of opinion,
Right.
because we're looking at different things than maybe the company is, or maybe the financials are looking at. So I think they're, from a guest standpoint, if you were listening to this, it'd be like, laugh. But maybe, hey, their per caps were where they wanted them to be, and maybe their attendance was where they wanted them to be. One of the reasons for the reservation system in itself was to deal with the overwhelming demand given their short supply, right? I mean, it's a nice problem to have when you're in that business. I want to go ahead and continue her comments here just real fast.
However, we expect the contribution from continued strong performance at our international parks in Q3 to result in DPEP segment-level operating margins that are slightly higher than the prior year.
So she's saying right there that, yes, they will have maybe some softening in their DPEP segment, or their Disney Parks Experiences and Products segment in Q3 coming up here, but they should be offset a little bit by these other parks rebounding from a post-pandemic environment that the domestic parks did some years ago. So that's kind of what she's saying there. Be very interesting to actually see if that actually plays out.
Yeah, that's interesting.
To finish off here before we get to the question and answers section,
Sure.
she says that the Disney Parks Experiences and Products will continue to be a growth business for the company, and the enduring focus will be on the guest as we go further here. She says about expectations for fiscal 2023, cash content spend company-wide is expected to remain roughly comparable from last year, excluding any potential impact from the writer's strike. So she is saying that the writer's strike might impact how much they actually spend on content. Very interesting. We'll see how that actually goes. Fiscal 2023 CapEx, approximately $5.6 billion, lower than the prior guidance or expectation of $6 billion, largely because of the timing of projects at the Disney Parks Experiences and Products division and lower technology spend at Disney Media and Entertainment Distribution. She does talk about that there are a number of macroeconomic factors that they are facing. The state of the global advertising market is really unstable and is falling, and content timing shifts could impact plans and expectations for quarter 3 and quarter 4, but they remain optimistic. I wanted to go ahead and play this right here real fast before we get to the question and answers segment specifically. This is from our good old buddy Robert Barnes. I know people love hearing from him. He's got all the interesting news and tidbits, right? But he had a members exclusive live stream last night, and he talked about the state of the economy real fast. And I just kind of want to give you, the viewers at home, an idea of what people in Wall Street and people in the financial end of Disney are kind of seeing, right? And what they are talking about when they talk about macroeconomic conditions here. So I'll go ahead and play it.
Are regional banks really failing, or is it the big banks and the big banks are collecting more assets? Combination of both, because they could just bail out these regional banks and they're not. So they clearly want to swallow them up. But there's systemic banking problems in the financial system, I think, for the reason Snyder has articulated, and that is being compounded by the insanity of the COVID pandemic economic policies in artificially creating demand, thereby creating a kind of an artificial oversupply, which now is a whipsaw effect with demand collapsing. Well, if you saw the more information, I mean, Germany's economy is in serious trouble. China's economy is not rebounding. Oil prices and commodity prices are going down, which tell you the economy is about to take a tank. And the banking report from the Fed is that that we're seeing the worst credit crunch between decline of demand for loans and credit limits being imposed by banks.
Uh-oh.
That the worst worse in some of the stats than we've ever seen in the Federal Reserve's report. Worse than even 08, 09 at the peak of the global financial crisis. That's how bad the data is. So and then you have the commercial real estate completely imploding. Talking about up to 20-25% being utterly useless. I think New York just sold New York sold a real estate building for like 10 cents on the dollar from what it was worth 10 years ago. And it's just disaster in a lot of places, and it's all coming in fast
and
hard.
Yeah. So I wanted to go ahead and play that. Sorry, I didn't know when he was going to stop that. So I probably should have met that up before. But yeah, so there are some concerning signs on the horizon there, and I think that's a thing that the Walt Disney Company will have to contend with, and what a lot of people will have to contend with when it comes to making plans for the vacations or seeing that movie in theaters or whatever. Things are more expensive than they were, and you now might be facing an oversupply problem, where we had a undersupply problem when just a couple of years ago, and a lot of times that's actually worse than the alternative. So that's what they're talking about on this earnings call when they talk about macroeconomic factors at play here that'll be affecting all of their industries and divisions. Okay, so should we start?
Yeah.
With the question and answer.
Let's do it. Let's rock and roll.
Okay, so first question right here, but it's at 13:05 on my clock here. Should be from Morgan Stanley. So let's go ahead and listen in.
All right.
Here we go. And just to clarify, I think Iger goes on answers first, then Christine, then Iger again. So
to withdraw your question, please press star then 2. And our first question will come from Ben Swinburne of Morgan Stanley. Please go ahead.
Thank you. Good afternoon. Bob, I wanted to ask you about what you learned on sort of two topics over the last several months. One is around the price increase on Disney+. You've sort of commented that you think it went well. Obviously, we can see the subscriber trends, and you sound optimistic that the company can continue to drive ARPU over time. I'd love you just talk a little bit about what you've seen in the customer base and reaction and engagement that gives you confidence around pricing power for Disney Plus looking ahead. And then a similar question around the cost rationalization and reorg at the company. Now that you're sort of deep into that, what have you learned about the opportunity for that to drive better financial results for the company? And Christine sort of teased it that there might be more opportunities that maybe exceed expectations. But do you think there's more to do? I guess is the short question on the cost side. Thank you very much.
Thanks, Ben. On the first question regarding price increases, first, we were pleasantly surprised that the loss of subs due to what was a substantial increase in pricing for the non-ad supported Disney Plus product was de minimis. There was some loss, but it was relatively small. That leads us to believe that we, in fact, have pricing elasticity. With that in mind, I think one of the things that we not only have discovered, but that we believe we have to do is that we've got to widen the delta between the ad-free service and the non-ad supported service.
I thought the reasoning behind why they were doing this was really, really interesting.
Because we clearly would like to drive more subs to the ad-supported service, which we did in the quarter, by the way. The obvious reason, because the ARPU potential of the ad service Disney Plus. And in fact, as we look to this upfront, and after careful and considerable discussion with our sales team led by Rita Farrow, we see that there's going to be a substantial growth in digital advertising in this upfront. I mean, quite substantial. suggesting, for the obvious reason, because digital advertising is so attractive to advertisers, that there's an opportunity for us to really lean into ad-supported. And again, raising our prices on the ad-free, keeping the prices on the ad-supported relatively modest, maybe perhaps no increases, increasing the delta, driving more subs in a higher ARPU direction. So we're heartened by it, and we're optimistic. And that is one of the strategies that we believe will help lead us ultimately to profitability and growth, along with the second thing that you mentioned, which is the cost rationalization. And I'll tag team with Christine on this. Clearly, as she mentioned, we're on a path to meeting or exceeding the $5.5 billion in cost reductions that we mentioned last quarter. That comes in two categories: content spend and SG&A. I'm going to let Christine handle the SG&A, but on the content spend, we said at the time most of that will come starting in 24 and leading and into 25, because we were committed to so much content already in 23. I'll let Christine handle the timing of the SG&A reductions and what potential impact that would have. Clearly, again, the price increases, the pushing more viewers or more subscribers to the ad-supported, and the cost containment are among the things we're doing to get to profitability.
Okay, so before Christine goes on, very fascinating, right? They really do feel that ad tier is really where the money's at. It's not really with the premium tier, even though you're paying premium for it. It's that ad tier, because it's double dip, right? You get a subscriber revenue and you get an advertising revenue from that.
Right. And it's kind of like bringing it kind of like, it's funny. The more we change, the more we stay the same. Right.
Mm-hmm.
So we have this new stuff now, the streaming world, right? And we're slowly kind of turning back the clock, and it's becoming television. Right? The ad tier is essentially television. I mean, that's what it is. I mean, it's on demand. You can watch it whenever you want. It's not like on a schedule like TV is, but
sure.
At the end of the day, it's you're watching content with a bunch of commercials in it. So we're kind of going back to what it was before. You know, it's interesting, but I think it's an interesting strategy though, how they're going to widen that delta, as Bob says, right?
Yep.
So it's going to push people off of the expensive premium tier and funnel them into the ad tier. That's interesting. That's an interesting move, Bob. That's an interesting move. We'll see how that works out. But I mean, it's, he's saying that like he was very surprised and encouraged by how little they've lost with the price increases and what have you. So maybe people will do that. Maybe people will stick on board. They won't get much churn, and they'll just do the ad tier. We'll see. We'll see how it pans out. And I'm sure this is the thing. None of this stuff is concrete. This stuff, they can play with this like they do with the annual passes and all that. You can play with it. You can adjust as you go. Like, let's say they go a little too far and they lose a lot. Okay, we can adjust it back a little bit and bring people back in, and they can work this stuff. It's malleable, right? They could,
like you said,
with what they got.
Pricing elasticity. And they did say they're going to be perfecting their pricing strategy. Not that it's perfect now. It's in a constant state of perfecting. So that's kind of the key terminology there. So that the ad tier has increases in ARPU, and also too that might accelerate their requirement for cuts across the line here. 5.5 billion is what they want to achieve. That might better facilitate that as well, which is very interesting. He also did say SG&A. And what is SG&A? That's selling, general, and administrative expenses. So when they cut the A is the big part that you should be focused on. That middle management, those cushy jobs for C-suite where, you were on board for 10, 15 years or whatever, or maybe you thought you were all good, like an Ike promoter or something, and you get in the boot. That's what that is about right there. And so we'll have Christine Waysons McCarthy, which this is really a realm that she is very good at right here. Reducing expenses and looking at people as numbers. We'll go ahead and have her expand on this very specific point.
Yeah, hi, Ben. I'll just further elaborate on some of the SG&A progress that we've had. And thanks for picking up that. I did tease that by saying that we would meet or exceed our targets of $2.5 billion. But, as we've gotten into this, there's been great cooperation throughout the entire company, which has been really rewarding because we're looking at this. And of course, there's the reality of headcount reductions, and we're going through those. But there's also other things that we're finding more and more opportunities on eliminating redundancies, looking at ways to become more effective by utilizing resources, people and other resources across other businesses. But we're really leaning into all the opportunities. There's technology, which we've also seen a lot of good progress. Some of it will be, and I say some, will be realized in the balance of this year, really at the end of the fiscal year. But the real impact is going to help us in 24. But once again, since we're all into it, I think, once again, having it be company-wide and having, it be something that all of our business leaders have embraced, we're looking for a real comprehensive look throughout the SG&A buckets.
And one more thing to add to that, Ben. We launched Disney Plus in many, many markets around the world, including many very low ARPU markets. And not only did we launch in those markets, we spent a lot of money on marketing in those markets, and we spent money on local content. So as we rationalize this business and we head in the direction of profitability, clearly we're looking at opportunities to reduce expenses in those markets where the revenue potential just isn't there. Thanks.
Thank you both.
Seems like a no-brainer there, Bob, but thank you for figuring that out.
Yeah.
It's just very interesting. It's revealing, I guess, with some of these question and answer segments on this.
Well, it's
go ahead.
I think sometimes too, as like fans, we think of this running this big corporation, right? Big company like the Walt Disney Company that sometimes there's going to be this like really complex solution. And sometimes, like Bob just stated, like sometimes pretty simple shit. It's like, if it's not making money, we're not going to do it. It's like, okay.
I'm going to skip the next question for now because I want to come back to it because it's going to be a big one. But question 3 was, what does a reduction volume in DTC content spending, what will do to subscriber growth? Iger, he basically gave an answer to the effect of, when they got into the DTC space, they were kind of a startup in that space almost. They didn't really have a presence there before, and not a lot of players were in the game as of that time. Some content didn't move the needle on sub growth much, but they want to be much more surgical on content creation and spend to target sub growth specifically, and also ARPU, obviously, churn, those kind of things. Sometimes you market for no net gain due to marketing costs, but others were marketed so light it didn't amount to viewership. So learning more about the industry as time goes on. McCarthy says content spend, Iger is spending much time attempting to adjust all of that strategically. Future expectations in revenue and spend don't include writer's strike. That was a specific key point there. A curated approach to general entertainment content. So just kind of reiterating what we had kind of, heard about before. But then I wanted to go ahead. Let's see here. Do I want to play this? Do I not want to play this? Yeah, well, I'll just go ahead and say it. So the next question 4 was, will digital advertising dollars make up for the losses in other industries? Iger says, we'll still shift much of ESPN from linear to DTC. Linear equals sub declines and advertising weakness. Must re-examine cost structure because of this. We got into streaming because of the cord cutting, but must reevaluate the strategy as industry matures, right? One of the ways we'll be building tools to empower advertising investments and making them much more attractive to advertisers. And he reiterated the health of the bundle, the kind of ESPN, Hulu, Disney Plus, or Disney Plus and Hulu kind of strategy right there. I thought that was kind of interesting because there has been some criticism laid at Disney for having gone so far into this industry at the expense of other industries that were previously profitable.
Right.
And it's like, well, you can't blame Disney alone for that. That was kind of an industry decision right there. And he does admit that, yeah, that did kind of cannibalize one, but that they are bullish on seeking profitability in this segment and doing it in a way that is strategically smart and will achieve those ends. So I thought that was kind of interesting too. The next one I wanted to play was question 5. So let me just get to that. Do you have any
Sure.
thoughts about that?
No,
kind of
no,
stuff, OG?
no. I'm good.
Here we go. 5420 from Barclay. Here we go.
The next question comes from Kanan Venkateshwar of Barclays. Please go ahead.
Thank you. Bob, on Hulu, the revenues of Hulu make it one of the biggest streaming businesses around, and it's also one of the oldest services around, but it doesn't seem to be profitable despite the scale. And sounds like you've made up your mind on buying the rest of Hulu based on the announcement of the combination with Disney Plus. Does this combination allow you to change the cost structure of Hulu by maybe dropping content spending or the number of titles on Hulu and raising price because it's now a single service? So any color on your plans with Hulu would be much appreciated. And Christine, on the parks, could you help us scale the impact of the recent wage increases in Florida and how that might impact the year? And historically, the business has delivered mid-single digit or better revenue growth and EBITDA growth faster than that. You now have a number of cruise ships, more attractions, higher price, but also higher costs. So could you help us think about the growth algorithm going forward more broadly? Thank you.
So to reiterate his question, just for the people who maybe had trouble understanding or hearing, revenue of Hulu has the most ARPU of any DTC product in the entertainment, but it still isn't profitable. Plans for Hulu: how will wage increases impact the year for Walt Disney World, and higher prices for products, but also higher costs? So how do you rationalize between the two? I think their answers are very enlightening.
Kanan, as you know, we have a contractual arrangement with Comcast that will enable them to put their share of Hulu back to us in early 2024. Starting in early 2024, there's a, further right that we have to call their share from them. And it's not really been fully determined what will happen in that regard, except that as we've looked more and more at the growth of the future of our streaming business, and I mentioned at the first earnings call that I did after I came back that everything was on the table. And in fact, everything was on the table, but I've now had another 3 months to really study this carefully and figure out what is the best path for us to grow this business. And it's clear that a combination of the content that is on Disney Plus with general entertainment is a very positive, is a very strong combination. From a subscriber perspective, from a subscriber acquisition, subscriber retention perspective, and also from an advertiser's perspective. So where we are headed is for one experience that would have general entertainment and Disney Plus content together for the reasons that I just described. How that ultimately unfolds is to some extent in the hands of Comcast and in the hands of basically a conversation or a negotiation that we have with them. I don't want to be in any way predictive in terms of when or how that ends up. I can say we've had some conversations with them already. They've been cordial and they're aimed at being constructive, but I can't tell you, and I can't really say where they end up, only to say that there seems to be real value in having general entertainment combined with Disney Plus. And if ultimately Hulu is that solution, we're bullish about that.
Real quick, Dre.
Isn't that interesting? Go ahead.
It is interesting. Iger is, I'm telling you, man, this guy's he's a smart dude. Because what he's doing, and I think you're right. I think you're right. I think when you said earlier that this is a negotiating tactic, kind of saying like we're gonna combine these two, Hulu and Disney Plus, because hey, I've been here and I've been able to since November kind of look at the books and wow, this thing has a lot of potential, right? He's kind of selling it to Comcast, like, hey, you should really get on this because I've been here and I've been looking at these numbers and this thing is worth every penny, right? He's selling it. So, but he kind of wins either way by doing this because, okay, if they end up keeping Hulu because the negotiations fall through, well, that's all good because he just said today how great this is and how profitable we could be if they do this and yada yada yada. So hey, there's no spilled milk over that. So that's positive news. If they sell it though, if they end up making a deal and selling it to Comcast, he wins too, because then it's like, yeah, see, this thing is such a great value. Right. You know, and then he can maybe mark up that price a little bit for Comcast because it's such a great value and just so much potential, yada, yada, yada. So either way, by doing what he did today, he kind of comes out on top, whether he sells it or whether he keeps it. And I think this is why Iger is where he's at today. This guy knows how to work the fucking system to a T.
He does. I mean, this is him working. This is why I said it before. It's like, okay, him putting it in the minds of everybody that there is real value.
Yes.
We'll go ahead and use his words here. There seems to be real value with general entertainment combined with Disney Plus, and ultimately, if Hulu is part of that solution, we're bullish about it. Him putting that in the minds of everybody out there and suggesting that there is some really big value with doing this. This is as 45 would say, art of the deal, right? This is how you do it, right? You play it up. And this is, I think, what he's doing right here. To paraphrase him, where we are heading is towards a unified experience where Hulu or its offerings live harmoniously and with and on Disney Plus. So, I mean, it's like, I think he's a smooth operator.
Yeah, no, he's
a smooth operator. And it's exactly what you said, OG. Exactly what you said.
Yeah, no, 100%. And that's why, to be on the park side, that's why I'm like legally, DeSantis and his team might have the stronger legal argument, but DeSantis ain't going to win this PR fight with Bob Iger. He's going up against Luke Skywalker, and he's just not equipped. You know what I'm saying? He's just not on the PR front, you know? And the PR front, I know a lot of people kind of poo-poo that, like, oh, it's just PR, who cares? No, fam. It's everything in politics, though. And the legal stuff is only possible if there's political will to do it. If he feels like the political cachet in doing the legal battle against Disney is not politically advantageous, he's not going to move forward with the political stuff. It doesn't matter how good a case he has. It doesn't matter how many experts think that he can win. If the political will isn't there and he's losing the PR fight, he's not going to do it. So, yeah, that's why this PR fight is so important with Reedy Creek. So important.
And that PR fight we will get into in a moment, folks, for sure. I might make that the next question that is asked so that we can field it here. But I'll finish off with Christine's comments on this because I think too she has some interesting stuff talking about DPEP or Disney Parks experiences and products.
Hi, Kanand. Let me address your question on parks earnings growth and the outlook there. So I think the way I would phrase this is we do expect a really solid year overall for our domestic parks. That being said, we also expect increased costs, and we alluded to that in our first quarter earnings call. And they're really coming from a few areas, most predominantly. One is wages with a new union contract, coupled with inflationary trends. We do have some new guest offerings, so there's some incremental operating expenses that come along with those. And we also have the operational support for adding a 5th cruise ship to our cruise line fleet. I think you all know that we launched the Wish back last fall. So we continue to look at ways to address cost management. The team down there has done a great job throughout the pandemic and then coming out of the pandemic, but they utilize a variety of tactics to mitigate potential margin pressures and downside risk across the segments. And some of the levers that they can, utilize to really address it are, by looking at capacity in some of our new attractions, they increase the footprint or increase capacity so we can open up the valve a little bit more on attendance. And with some new attractions that are more based on newer IP, so that'll get more people not only coming in, but wanting to come in and enjoy the experience while they're there. And we also are really continuing to focus on meeting our customer needs there. But we think that, this is a growth business for us. We've said so in the past. And I do just want to give a call out to our cruise business. That business, as you know, was the most impacted. And we had talked about that was going to be the last business to come back from the closures during the pandemic. But that business has come back incredibly strongly over the last year, this fiscal year. And even looking out to the balance of our fiscal year, we're very encouraged by what we're seeing there and the reception to not only our new ship, but also our legacy ships within the fleet.
So there you go, right there. Very interesting. Talk about levers, right? We've heard her talk about levers before. What have we just seen from Disney regarding those levers? Well, we're seeing good to go days added for APs.
Yes.
We're seeing, just even recently, APs are now able to go to every single park sub Magic Kingdom on weekends, I believe, after 2 p.m. We're seeing the elimination of reservations required for date-based tickets out there at Walt Disney World. They're playing with those levers right now. It's very interesting how they think of the parks product right there. And also too, Disney Cruise Line again, carrying its weight. That's good to see. Okay, all right. I guess we should take it to the very interesting question, the one that Iger gets fired up in. Here we go.
Let's do it. Let's rock and roll.
Around 42, if I'm not mistaken. I hope I got that right. This is going to be on Shanghai, but the RCID. This is the first time, actually, where we have heard the RCID actually be brought up on an earnings call like this at all. So I think this is very interesting how they did. Without further ado, here we go.
Go ahead.
Hi. Great to see the parks doing so well. Christine, can you dig into the contribution from Shanghai and where that is relative pre-COVID into its potential? And Bob, Florida is such a big part of the value of the company, but you have this political issue that only seems to get more press. It seems like you're stuck with this fight. So how should investors think about the risk, both the near-term and long-term business for Disney? Thank you.
Hi, Phil. Let me address our results at Shanghai. They were incredibly positive this quarter. We've been really gratified to see the bounce back from the pandemic closures that we had. We're not going to get into too many specifics, but suffice it to say that the business is doing extremely well on both an attendance and a per cap basis. We see that momentum continuing. And we also have some new attractions. We've talked about Zootopia coming later this year, and we believe that is going to drive even further attendance and spending at the park. But Shanghai is doing extremely well, and we've been really gratified to see that bounce back. Like I said, it was closed for quite a long period of time during the pandemic.
Regarding Florida,
here we go.
I got a few things I want to say about that, Phil. First of all, I think the case that we filed last month made our position and the facts very clear. And that's really that this is about one thing and one thing only, and that's retaliating against us for taking a position about pending legislation. And we believe that in us taking that position, we are merely exercising our right to free speech. Also, this is not about special privileges or a level playing field or Disney in any way using its leverage around the state of Florida. But since there's been a lot said about special districts and the arrangement that we had, I want to set the record straight on that too. There are about 2,000 special districts in Florida, and most were established to foster investment and development, where we were one of them. It basically made it easier for us and others, by the way, to do business in Florida. And we built a business that employs, as we've said before, over 75,000 people and attracts tens of millions of people to the state. So while it's easy to say that the Reedy Creek Special District that was established for us over 50 years ago benefited us, it's misleading to not also consider how much Disney benefited the state of Florida. And we're not the only company operating a special district. I mentioned 2,000. The Daytona Speedway has one. So do the Villages, which is a prominent retirement community, and there are countless others.
Here we go. Here's the kind of the drop point right here.
So the goal here is leveling the playing. If the goal is leveling the playing field, then a uniform application of the law of or government oversight of special districts needs to occur or be applied to all special districts. There's also a false narrative.
Go ahead, OG.
No, I'll let him finish, and we'll do it at the end.
Okay, cool.
That we've been fighting to protect tax breaks as part of this. But in fact, we're the largest taxpayer in Central Florida, paying over $1.1 billion in state and local taxes last year alone. And we pay more taxes, specifically more real estate taxes, as a result of that special district. And we all know there was no concerted effort to do anything to dismantle what was once called Reedy Creek Special District until we spoke out on the legislation. So this is plainly a matter of retaliation, while the rest of the Florida special districts continue operating basically as they were. And I think it's also important for us to say our primary goal has always been to be able to continue to do exactly what we've been doing there, which is investing in Florida. We're proud of the tourism industry that we created, and we want to continue delivering the best possible experience for guests going forward. We never wanted, and we certainly never expected, to be in the position of having to defend our business interests in federal court, particularly having such a terrific relationship with the state as we've had for more than 50 years. And as I mentioned on our shareholder call, we have a huge opportunity to continue to invest in Florida. I noted that our plans were to invest $17 billion over the next 10 years, which is what the state should want us to do. We operate responsibly. We pay our fair share of taxes. We employ thousands of people. And by the way, we pay them above the minimum wage, substantially above the minimum wage dictated by the state of Florida. And we also provide them with great benefits and free education. So I'm going to finish what is obviously kind of a long answer by asking one question. Does the state want us to invest more, employ more people, and pay more taxes, or not?
Okay.
Wow. He went right for the throat.
Go ahead, OG.
Well, he went right for the throat. Number one, this was never, I agree with him on that. This was never about a level playing field. And it's not even, look, he's, DeSantis talks a lot about, treating Disney different. Disney's not going to be treated differently. But, okay, but that works both ways, right? Like, you want to talk about, maybe Disney was treated differently with the Reedy Creek, but now you're still treating them differently and they're still special in how you're punishing them. Because you're not punishing Universal, you're not going after Universal like you are Disney. Everything DeSantis is doing right now is not to level the playing field. It's very, very targeted, where those legislation is like, companies that operate a monorail, basically, these rules apply to them and them only. And knowing Universal doesn't have a monorail, like it's so targeted just at Disney. It's ridiculous. This has nothing to do with leveling the playing field. Iger mentions Daytona Speedway has a special district. Gee, I wonder why they're not being targeted, because they're mostly Republicans. Same with the Villages, right? So we're going to keep those special districts. Now I understand that they're not the size of Walt Disney World, but hey, special is special. If DeSantis is against being treated differently for Disney, you should feel the same way about the Daytona Speedway or the Villages. Like, why isn't there this big campaign by Meatball Ron to go ahead and level the playing field with those industries? None of that. So it's totally retaliatory. At the end of his comment, though, Iger, I think that's the meat and potatoes, where he says, does Florida want the jobs and the investment or not? Right? That's the meat and potatoes there. That's the leverage right there. He's appealing to Floridians with that comment. He's appealing to even fellow Republicans, because he's saying, look, we benefit the state here, and we can just as easy pull back and not invest. And we're looking to do so. He's heavily implying that that's the case. Like, they've made the decision not to invest right now in Florida. When he said we were going to invest $17 billion over 10 years in Florida, he was telling you right there that $17 billion is off the table right now. We're not doing it. And you know what? I don't blame him. I kept hearing from all these people like, oh, well, they should invest because of Epic Universe and this, that, and the other. Why? Why would you reward the governor with more investments when he's actively trying to fuck you over? Why do that? use your power and leverage it. I've been saying this for the longest time, and Bob Iger is absolutely correct on this. You have to leverage that power. Like you said, Dre, with 45, the art of the deal, this is the art of the deal. And 45 even mentioned this in one of his True Social posts.
Sure
this is exactly what Disney should do, is they should pull back. That's exactly what Bob Iger is doing. And this is the right move. And I think it's going to make an impact. I'm telling you, they are in a full-blown media blitz against Ron. And they're in full-blown like this PR thing, and I think that this is just another one of those things that are going to that's going to be effective and kind of chipping away at DeSantis's political cachet. But I know we differ a little bit on this Reedy Creek thing. What are your thoughts on this, Dre?
Lots. So Iger says, well, this ain't about special privileges. This isn't about this. There are 2,000 other special districts in the state of Florida. Why are they targeting us? Okay, so which other special district in the state of Florida has their own policing power? Which one has their own fire station? Which one has the ability to set up their own courts? Which one has the ability to set up their own nuclear power plant or to maintain their power and utility facilities? Which others have their own board that can impose state issue, tax-free bonds on this whole thing? What other special district in the U.S. has that kind of power? None whatsoever. And by the way, he's saying that there's no, hey, this ain't about special privileges. Okay, is that why you filed for injunctive relief in your own lawsuit to retain the covenant and developer agreements that you yourself signed with the RCID? Is that why you want injunctive relief for that? Oh, I thought it wasn't about special privileges, though.
Well, I think what he's
about that, though.
I think when he says, "Oh, this isn't about special privileges," I think he's meaning from DeSantis' side, like, because DeSantis' argument is it's a special privileges, and Iger saying this isn't about special privileges, it's about retaliation. I think that's what he was trying to say.
But that's my thing, though. It is about special privileges, because what else have they gotten rid of? What else have they gotten rid of? They through the RCID transition into the CFTOD, all the powers remain. In fact, we had other YouTubers saying, "Hey, you know what? This was a win for Disney. They maintain all their power and so forth." And then even before that, they have the development agreements and covenants, all win-win, right? And then only when those specific agreements were actually challenged by the board and by the state, now it's time to sue. Literally right after that, and they're looking for injunctive relief specifically to maintain those. So this is absolutely about special privileges, and that's the thing. This is why Disney donated to Republicans and Democrats in Florida, right? Was to maintain this very special arrangement that they had crafted back in 1967 and ratified in 1968. That's why the legislature changed immediately right after that in 1968 to pass new special district laws to forbid this practice from ever reoccurring. Disney understood the value of this for 50 years, and they themselves decided to put that into question. Okay, they decided to put that into trouble with their actions. And it's like, well, we're not leveraging the powers, our powers, that we have in the state against the state. You committed to it. You had a goal that you said via some Twitter, what is it, statement or whatever, some press statement saying that our goal as a company is to get that legislation revoked. I'm sorry, Iger. Look, this appeals to what he said right here appeals to a large demographic out there. It does. And I do agree with you, OG. He is going to win this PR battle. There is no question about that. He's saying all the right things. However, the facts on the ground are so different from this kind of media narrative that has been constructed around this thing, and that Iger is repeating right here. It's remarkable. Look, if he wants to put up these arguments, fine. It's interesting because some of those things weren't actually included in the lawsuit. But he will win this PR battle. He dangled the carrot of $17 billion. He took it away. Right. Very good strategic move right there. By the way, that was one of the reasons why Disney retained the RCID privileges for so long, because they dangled the Epcot carrot as well. And we all know that never actually happened in the way that Walt said it would back in 1966. It's a fascinating kind of back and forth here that we see between DeSantis and Iger.
Yeah, it is. No, it's fascinating. With the special privileges thing, though. Well, okay, let me circle back. Actually,
sure.
When we say because I hear this, and you kind of mentioned it too, well, Disney started this, so they deserve the outcome. I disagree, though. It's kind of like I think you could say that Disney started this, and they created this mess with their statement, right? And I think most would agree with that. But I think just because Disney started it doesn't justify any and all responses. So for example, if I walk up and I pinch somebody, right? And they're like, "Ow, man, why'd you do that?" It doesn't give them the right to take a hammer to my head.
Correct.
Well, I started it. I think that DeSantis's response was so overblown. You're gonna completely destroy this relationship between Disney and the state of Florida. You're gonna completely upend this whole thing. You're gonna permanently take away this district that's, for the most part, worked pretty well for 50 years. You can do all that over one, like you said, Twitter press release. It just seemed like a huge overreaction. And to make matters worse, DeSantis even admitted that he got a phone call from Bob Chapek. Chapek said he didn't even want to respond to he didn't even want to do this. DeSantis knew from the get-go that this was going nowhere anyway, and that this was all optics by Bob Chapek to get people off his back. So the reaction was so overblown.
But you have to understand, OG. See, from the outside looking in, I can understand that the argument that you just cracked right there. I do fully agree with your argument right there, that the reaction to that one comment was overblown, right? But you're not following the 50 plus years of history here with Disney in the state of Florida, and how they've muscled around the legislature for so long to get their way in the carve out of multiple bills. Some of them even coming from DeSantis administration himself, right? What is it? The Free Speech Act or whatever that specifically carved out Disney, right? Through, hey, if you own a theme park on whatever, this doesn't apply to you, that whole thing. For Disney to come back and say, you know what, we're going to challenge this new law that you actually put out there. From all those years of buildup between the tensions that have built up over time between Disney and the legislative bodies in Tallahassee, and including the other businesses in Florida. Again, Disney hasn't been the best neighbor either. There are proposals where, hey, we want to access our land, but it goes across Reedy Creek property, and Reedy Creek's like, nope, not going to do it. You can't access this portion of it. We're not going to build a road. We're not going to do this. So the facilitation of that kind of stuff has been stymied by Disney in the past. They have lobbied in Tallahassee for a long time, like some previous legislatures in Florida have said, if your bill has a rat problem, you ain't gonna get it passed. This had been building up for a while, and for it to come out here, yes, the pretext is definitely questionable. Not gonna say it's not, but this was gonna happen. I will say, has it been mutually beneficial over time? Yes. However, okay, it was very mutually beneficial at the start. It had been one way for a while, and especially regarding the powers that were given to them for the creation of Epcot after the company committed not to creating Epcot the city, but Epcot the theme park. That should have been readdressed a long time ago. And hey, look, if Disney wants to be treated like everybody else, they can file for a special district. They have not come to the table requesting that. So I look at Iger's words here, and I look at him with a little bit of skepticism, because regarding this specific issue, they just haven't, I would think, play ball in the way that Disney is positing here on an earnings call.
That's fair. Well, and to be fair too, some of these carve-outs didn't just involve Disney though. Like when that legislation, when they added the streaming services, I believe, and the carve-out was if you own theme parks. Well, that benefits Universal too, because they're in the same boat.
Oh yeah.
So it's not just a Disney carve-out. A lot of this stuff has been carved out for Comcast as well. And it's
by association. I mean, if Comcast wasn't there, that doesn't change. That kind of thing. So, I don't know. This has been brewing for a while. This is why I'm going to criticize DeSantis here too. Listen, if you wanted to end this, just end the RCID and have them apply for a special district. How hard would that have been? But instead, he wanted to do this thing where he's going to appoint this board here, which I have heard. I guess that is consistent with other special districts that embody 2 counties or whatever, or governing bodies that encompass 2 counties or cities or whatever. The governor will usually appoint those things. Like I get the whole thing, right? But the way this is all done, it's been very messy on DeSantis's end, and Disney's PR battle, I think, will win ultimately in this. The question is, what's going to actually happen in the court of law? I view this a little bit with skepticism here, but we will probably update viewers on all things RCID in the future. That is for sure. By the way, I think I have DeSantis's response here officially to this. Let me see if I can bring it up here.
Oh, okay. I think you're being treated unfairly.
Yeah, that's an interesting one.
Exactly.
I'm sure this is not going to let that anytime soon.
No, it's not. This RCID story is with us for a long time, and this is it's hurting Florida. I don't think this protracted battle is benefiting anybody. I don't think DeSantis is benefiting from this politically at all, and I don't think it's going to benefit theme park fans at all, because I think they are pulling back, and it's not benefiting Disney at all because the more you invest, the more you bring in. There's not a single person, except maybe the people sitting on the board, who benefited from it. So it's sad. Hopefully we can get to some, look, the days of the old way are over. I think ultimately we'll come to probably it'll settle somewhere, which is like a hybrid of what we have now, what they used to have or something. Yep. Yeah, the old days, Disney's not just going to go back to what it was before. If Disney gets to go back to what it was before, oh my God, Bob Iger is the ultimate salesman. This guy moved heaven and earth. I would be shocked if that happens. I really don't believe that will happen. I do think this will be settled through PR and court fights, and DeSantis will win some of these, Disney will win some of these, and we're going to have sort of a hybrid mix at the end of the day.
It is real fascinating to see where this actually goes, because while there is precedent on some aspects, there's no precedent for this. Nothing like this has ever really been legislated, and that's why it's hard to speak about even from a legal perspective on this, because it's complicated. It's very complex.
It is.
Even I have a problem or trouble completely encapsulating it in my mind as well. 2 things I wanted to go ahead and end our video on. One was question 6. Advertising product and AI was the question, right? And we heard Iger joke about how he was like, yeah, well, I hope one day there's an AI version of me doing these earnings calls.
Yeah,
that kind of joke there. That was pretty
good.
That was
funny.
But he says that AI represents interesting opportunities, already using AI for efficiencies, and want to utilize AI when it comes to with consumers and their opportunities. We talked about how AI was being utilized for programmatic advertising. So yeah, they are actually utilizing those things, and now their advertisers are using kind of AI enhanced advertising technologies in order to facilitate what they want for their product. AI would be disruptive, he says. There are legal implications, and I guess he said that their lawyers are working around the clock. Remember, I told you, OG, some legal stuff there that hasn't been quite fleshed out. Yeah. But he's not ready to be specific on how they plan to use AI in the future. I thought that was fascinating.
Yeah, wild stuff, dude. Wild stuff. This was an interesting earnings call, and not because of the numbers. The numbers were kind of whatever. Yeah. It wasn't exceptionally great. It wasn't really exceptionally bad. It was just kind of like whatever.
Middling.
It was the conversations around the numbers, what Bob Iger was saying, and that kind of stuff.
Oh, yes.
That's the stuff that was really fascinating with this call. So it's interesting. One thing I want to kind of also mention though is, and I didn't get to mention this before, but
sure,
it's really refreshing though to see, and I've said this before, Disney and Comcast sort of at least at a better place. It seems like they're at a better place now than they have been before. And I like that. I mean,
Yeah.
I really do. I think that they're competitors, but I want to see a little bit more of a friendship there, kind of like Marvel and DC. We see in a lot with James Gunn, and he says, "Hey, we love Marvel," you know. And I talk to Kevin Feige all the time, and you know, we're competing in the theaters, but at the end of the day, we're both kind of rooting for each other. And I never felt that same energy with Disney Universal, especially in the theme park space.
Yeah.
It felt a lot nastier. And as a Disney fan, look, I've said it many times before, like. That's one of the things that kind of turns me off to Universal. It's like, okay, so they're out to destroy the thing that I love. So how is that going to get me to like, how's that going to bring me on board? You know what I'm saying? It turns me off personally. So to see them sort of like, hey, you know, we're cool and hey, we're competitors, but at the end of the day though, we're also friends. I like that. I like to see this kind of happening. Now we'll see if it lasts. We'll see if it lasts because we've heard Iger and Roberts, they do not like each other. So we'll see. This can go south real quick, you know, but it seems like it's moving in the right direction at least, you know, and I think it benefits fans too, you know. I mean, I think that when these two companies are cooperating with each other and working with each other, I think it's good for fans as well. So,
yeah,
we'll see.
I to finish off here, there was some other minor stuff, but basically a reiteration on this whole thing. He did say that that Star was kind of similar to their strategy regarding like a Disney Plus Hulu kind of hybrid unified experience. That was an interesting relation there. I didn't quite pick up on that. So that was quite interesting. But yeah, just a kind of a reiteration of what was said before. On your point about the hostilities between Comcast and Disney, yeah, I do kind of like long for the days of like when Knott's would congratulate or celebrate, you know, with Disney, and you know, they were kind of be this kind of mutually beneficial relationship. Disney would go over to Knott's, you know, the chicken plantation and the chicken restaurant, I should say, sorry, and kind of you know, indulge while conceptualizing the park, or even while the park was operating. That was kind of fun back in the day. You know, you do want a little bit more civility, a little bit more of a cordial kind of, you know, celebratory kind of, hey, you know what, your success is our success kind of thing going on there. That was kind of really heartwarming to see from Iger at the top of the call there. I thought that was really, really cool. But overall, like you said, it wasn't the numbers, it was a talk around them. That was very interesting on this call. That was quite cool.
Yeah, very, very cool. Very, very cool. So it was a great conversation, Dr. Dre. I do appreciate you, brother, for coming on, talking shop with me. And like he said in the show, we will be bringing up a lot of this Walt Disney World stuff. We are planning to do a Citrus Corner with the amazing George, the Disney Family Man 23. We are going to do a Citrus Corner very, very soon in regards to all the Walt Disney World news, because there's been a ton. Yeah, we love George, and we're thinking of you, George. We love you, brother. We're gonna do that show very, very soon. And also, I do have a winner. I do want to announce real quick this too. I do have a winner for the vintage Disney 100 cereal box. That remember, like a few shows ago, we had Theme Park Casual on. And for those of you that didn't catch that show, I basically said, if you subscribe to Theme Park Casual, send me a screenshot of proof that you subscribed. I'm going to send you a Disney 100, kind of like this 1950s era looking vintage cereal box. It's like a Mickey Mouse Club thing. It's very, very cool. I do have a winner. It's Michael Marsden, I believe you say his last name. So Michael, I will be emailing you very soon, getting your information. I will be sending that out to you right away. But you are the winner, Michael. Congratulations on that. And other than that, we're going to close the show out. I actually, real quick also, on a personal note, I did have a colonoscopy the other day. That was an interesting experience. I have to say, you know, I'm going to tell a story, Dre. I already told you, but I'm going to share with my audience.
Let's do it.
A little bit with this, because this is interesting. So in 2017, I had emergency surgery because my appendix burst, right? And so I went in for surgery. And I had a really bad experience with the anesthesia, right? So basically what they do is they give you the drug to like knock you out, but they also give you a muscle relaxer to basically paralyze you during surgery, right? So in my case, the muscle relaxer kicked in like 10, 15 seconds before I was knocked out.
Ooh.
Okay. Well, that really sucked because I was completely conscious, completely aware, but I couldn't even like move my eyelids or talk. It was like I was trapped in my body. I couldn't even tell the nurses or anything. It really a terrifying fucking experience, you know? And even though it was like 10 seconds, it's like in my brain, like it really messed with me. So going into this colonoscopy, I was like nervous about the anesthesia, right? So my doctor said, don't worry about it. That can't happen because we don't give you muscle relaxers for the colonoscopy. Okay. But still, like, it's still like, oh, I don't know though, right? It still has that thing. So I go in for this colonoscopy and the nurse was like, she's like kind of doing all my, like my blood pressure and all that stuff, right? And she was telling me like, yeah, people do these all the time with no anesthesia, right? Here's the thing though, I wasn't just getting a colonoscopy, I was also getting an endoscopy, which goes down your throat and into your stomach, right? I told the nurse, I'm like, you know what? I'll do it without the anesthesia. I'm good. I can just kind of muscle through this thing, no big deal. So doctor comes in and he's like, are you sure you want to do this, bro? Like the colonoscopy is probably all good for you, but the endoscopy is going to be really tough swallowing that camera. I said, doc, I got this. I got this, doc. I got this. We go in there, dude. They put this thing in my mouth to keep my mouth open. And the camera is like, the tube in the camera is like the thickness of this Sharpie, okay? Going down your throat, okay? With a light on the end. Dude, I couldn't do it, man. He didn't even get to the back of my throat. He didn't even get to like the back of my throat. And I'm like, right? And he pulled it out and I'm like, oh God, dude. I'm like, can I try one more time? He goes, I mean, if you want, we can try one more time. Put it in. He couldn't even get it past my tonsils, dude. Like it was bad. Long story short, ended up doing the anesthesia. I had a great anesthesiologist. Dude was fantastic. He said, just think of like being on the beach or something. You'll be out in no time. He hooked me up. I was out. I woke up. I felt great. So big shout out to the anesthesiologist team and my and my doctor at UCLA. They were absolutely fantastic. Dude, I'm telling you, the patience they had with me and the outcome was fantastic because it really did kind of give me a little peace of mind with the anesthesia now. Because now I've had at least one good experience, right? Not just one bad one. So that's my colonoscopy experience. But if you're 45 or older, you should definitely get one. It's good peace of mind just to get checked out. You never know. And if they see anything in there, they can remove them. If they see a polyp, they can remove it. So, not the greatest experience with all the prep and all that stuff. But at the end of the day, you're doing yourself a favor. So anyway, get your colonoscopy, everybody.
Yes, folks, we only have high-class stuff on this show.
We got a show and a half right there, man.
There we go.
Really did. We got down and dirty with the numbers and
down and dirty with the.
And we got we got down dirty down the throat of OG55. That is fantastic. By the way, applause for the fine doctors and nurses that took care of my brother here. Yeah. Thank you very much to all the specialists out there.
Yes.
Taking care of the OG55 crew for sure. And honestly, OG, without any further ado, I think that wraps it up.
Yep. If you want to go ahead and let everybody know where they can find you on social media, sir.
Will do, good sir. The best place you can find me is going to be on Twitter. It's right down there, right below my avatar, at VashSky. Just go ahead and type it in, and it should pop up for, as Kristen Wastelands McCarthy would say, for all the robust discussion right there. Yeah, the D-Pep. Yeah, I like that.
There you go.
Good stuff there. But if you guys want to see me, and hopefully when you guys see me next, it will actually be in camera form. Well, you can go ahead and do so right with the subscribe button down below on the channel you're watching right now at OrangeNerd 55, where we have some amazing shows, including the one you're watching right now, OrangeNerd, where we talk about everything C-suite related as it relates to the Walt Disney Company and the entertainment industry at large. We have the amazing Jay with his Story Geeks talking about the stories that impact our lives. The amazing, the one, the only, our dear brother George with his Citrus Corner talking about everything Walt Disney World related, and my own show, Freshly Squeezed, your source for juicy news and info, squeezed fresh right from the Grove. Very cool, OG. That was a cool show.
Absolutely. Great show. It was fantastic talking shop with you, Dre, as always, brother. Thank you for coming on, and thank you also so much for watching. Comment down below with all your thoughts on everything we discussed today. Like, subscribe, and as always, have a wonderful, wonderful day.
フォースと共にあらんこと